Good day all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Wednesday, and we're at the 4th of December, 2019, about 4:43. So these boards are going to clear in a moment or two. But as you can see, an up day in the stock market, down in some of the metals, copper up, I'll explain that in a minute, and a mixed bag today, very mixed bag, except for the British pound to the upside. So why the British pound to the upside? That's because the polls are not showing that the Conservatives, Mr. Johnson, Prime Minister Johnson's party, are losing any ground, which could lead, what is it, December 15th, the election day. I think it's the 15th. I got to check. It could be the 12th or the 15th. I want to check that myself. To him getting a majority in Parliament, and then Brexit probably gets decided. Remember, these are polls. They're not notorious for being always right. A big up day in the energy market as OPEC ministers keep talking that, gee, I want to cut more production cuts. Meanwhile, the ones that haven't been cutting, that have been cheating, are still cheating. Yet one of them is Iraq, and they're saying, no, we want more cuts. I don't know if the Saudis will go along with that. As we get to the weekly area chart of closes, you're in a corrective mode. How long it lasts, don't know. What I do still think, and I haven't changed my opinion, I still expect that we're in that Santa Claus rally period, and I am expecting a good end to the year. How it comes about, don't know, but I play the percentages. And when you're up in the first week of November as strong as you were, and the market continues on, and you enter December like this, you can get pullbacks, but typically the market still ends up on solid footing. If you had a hard break, 30.08 is the 18-week average, and from here, that'd be 103 points. Certainly something the market can live with. Am I saying it'll happen? That's not what I'm saying, but I am saying that's the support zone in the market on a weekly chart on a close-only basis. When we take a look at a daily chart, now I see a market that's gotten itself into a mess. This was, boy, I'm scared I'm going to miss out on everything. I'm buying at any price. That's what that trade was. Then the market blew itself up and came down on Monday, fell apart Tuesday, and today you got a pause. That's how I'm reading it, a pause in it. Is there a trend here? Well, if you look at the swing line, it is saying no, it is not a trend. You have a market that's got a higher high and a lower low. That is not the definition of a trend. Now, tomorrow, if you close lower, an inside day or a lower low, you will have lower highs and lower lows. So that's the what if scenario. What about filters on this? Let's put on some key averages. You know how often I tell you the line in the sand is the 18-day moving average of closes. Look where the market's fighting its battle. It's not just today. You fell back to it on Monday. You played around with it on Tuesday, Wednesday. This is your battle. If you let go, as we looked on the weekly chart at 30.08, 29.93 is also the 100-day average. So I have two areas of potential support if the market were to let go to the downside. Where's the lower Bollinger Band? Right here. So I have the upper band, the lower. The first time you hit the band, which you did here, I look for that to be a support zone. The first time you run up to the upper one, I look for it to be a resistance zone. Going back to the 18-day average and settling just basically on it still keeps these two numbers very live in there. So I see a market that's just spinning its wheels right now. In terms of momentum, it is basically still down. It hasn't flattened out yet. It's attempting it with today's rally, but it can easily extend itself to the downside tomorrow. What about the NASDAQ? Is it any different? Not at all. Here's your first coming up test. You didn't quite hit it here. Got to it on last Tuesday. Followed through. Again, those people that, oh no, I'm not going to be left out of this trade, they get caught. There's your break back and holds the 18-day average. Comes down yesterday to the lower band. And as everybody's panicking, I am certain that what I was saying was, be careful here. This is the first challenge. It's often a spot where the market sees pros come out. Where do you go today? Back to that line in the sand. So now we've got to see. If you take this low out again, you could end up with lower highs, lower lows, but you'd be under the band. I think you'd be living on some borrowed time. Doesn't mean you can't get a good size correction. And no, am I saying there's a trend? I don't see a trend right here. It has stepped out of it. When I get to the Dow, Upper band, lower band. I'm not going to go through it all the time the same way. Unable to quite make it to the 18-day average, but that's still a resistance for tomorrow. If you were to take out this area in the chart, you could set up the 100-day average, but again, the market's trying to hold that band. In the Russell, you never did make it to the lower band, and as I think I said, you've changed this market. You've got an uptrend, higher lows, higher highs. You break that trend if you take out yesterday's low of 1587.50, and in fact, if you didn't get back over that high and you broke that, you'd have lower highs, lower lows, setting up another challenge of the Bollinger Band possibility. In the cash VIX, I think I said yesterday, I know I said it in my subscriber videos, that I think yesterday you finally got to the point where the pros are probably saying, okay, the worst of whatever the president did with NATO is about done, and they're going to start selling, I think, calls, looking for the market to get back to the closest moving average. And that's what I think is going on right here. So you don't have a trend. You have a lower low, higher high, two resistance points. It's always, I think, more dangerous selling a call than a put when you're down at levels of 10 and 11. Be up at a 30 level? No, a whole different game changes in my opinion, but we're not there. So that's what I think is going on. In the T-bond market, you tried yesterday a good rally, gave back a chunk of it today. Do you see the 100-day average? That's really the fighting zone. You fall back, you're finding support against the 18, but it seems to be that area is the zone. Momentum is turning down. Often momentum leads price, and that is now trying to turn down. So I'm looking to see how the market does again here. Again, I don't see a trend. I have the same thing to say in the 10-year note. I wouldn't be surprised to get back here. And again, momentum's trying to turn back down. When we come to TLT, the battleground isn't the upper Bollinger Band. It's the 100-day average. It's showing itself rather clearly. Again, momentum down, higher high, lower low, no trend pattern. Dollar index went very quickly from the first challenge of the upper Bollinger Band. This is where everybody gets, if you will, overdone on the upside, especially in currencies. Currencies like to stay within these bands, especially the dollar index. So you got up to it back here, you hit it again, and I realize everybody's the most bullish. Bingo, you get hit. So now the market's making a run under the 18-day average. This is Monday. Yesterday, you come down, challenge the 100-day. Now the question is, the lower Bollinger Band, you go through it. You hit it yesterday. Today you hit it and you bounced away from it right on the close. What do we have? I don't see a trend. I still see a higher high, lower low. Another confusing market. Eurocurrency, what do you think? This is Monday. This is yesterday. The number I'm looking for, if the market's going to continue up without a trend, is the resistance between the upper Bollinger Band, the 100-day average, with support back at the 18, but still no trend. Today you go to that upper Bollinger Band, bang. You fall right back away from it. Rather hard, in fact. Interesting day, but still no trend. Here's a market to be careful of. This is called the sideways action that I look for when you get Bollinger Bands just drifting sideways and price in it. I realize the first challenge of the band is where pros take some money off the table, but I've always got an eye on sideways action. Unless you come back quickly under 129.01, you could trap people here. So the market takes off today and it's laid the trap. Now does it follow through? You get overbought or oversold if you came out of the bottom side initially. You've got to recognize this tight pattern, play it accordingly. Do I think the pros are cutting down on positions, not buying over the Bollinger Band? Absolutely. But could this be the beginning of a launch higher? Yeah. And if Mr. Johnson's party were to win, some are saying you could go to the 134, 135 level in this. Doesn't surprise me because his party is not losing its leadership, its momentum in the polls yet that I've seen. In the end, I see resistance now at the 18-day average of closes. Yesterday was a big day, an important day. You got up to that average, closed over it. Where are you going to make a run over this high? Because you still have lower highs, lower lows. And no, I don't think anybody's getting super aggressive there. But now, The market's starting, I think, to look at this 91, 97 level as a resistance. Not getting over this number could put the market, because you've got lower highs, lower lows, and a close underneath that market with bias, with the bias down and momentum flattening out. You're putting into play the possibility again of the lower Bollinger Band. If you get up over this high, I don't think the market gets crazy to the upside. It could, but I don't see it, because you've got that resistance of the upper band. Bitcoin, this was the run that I was looking for, and it failed. I was looking for this market when it lost its embedded reading here to make a run at the 18-day average of closes. Tell me it didn't. It did. And today the market just said, I got close enough. I don't know what the trend will be next, but that was to me the attempt at it. In the Brent versus WTI crude, as you can see, we're just sort of hanging here. We got over, and that was the upside momentum the market had for WTI gaining. I'm sorry, for WTI losing against the Brent. Now it seems to be gaining back on it. What would you think if I tell you I think the pros are going to sell that market against the upper Bollinger Band? Not go short. I think that anyone that has been trying to play this upside going into the OPEC meeting, that to me is a resistance point, support 61.77. The WTI is stronger than the Brent. Why? There's no trend here. You got a lower low, higher high, but you've had higher lows, higher high here, and it's further away the upper Bollinger Band. Momentum up, bias up, trend up. When I take a look at gasoline, the market's been in a downtrend. Lower highs, lower lows, made its run yesterday. This is when everybody's throwing in the towel, and I'd be saying, I'd be very careful about that. You're hitting your 100-day average, you're oversold as can be. I think that's where the pros are moving out of the market that are short, and here's your bounce coming in it. I'm not bullish this market. I'm looking for resistance, but there's a big gap here between 163 almost, the 18-day average, and that risk back over 170. Then we get to the nat gas. Now, in the nat gas, my eye is right here on the embedded reading. You lost it yesterday. You kept it lost today. It cannot be regained without another 3 minimum days with both numbers under 20. I think the contra-trend traders are looking for the morning EIA number, and I would not be surprised, regardless of how the number comes out, that if you don't take out 227, that they're going to try to reverse the market, if you will, for a bounce in it. That's all I'm saying. But that's typically what goes hand in hand with the lost embedded reading. I'm wrong on that thought if 227 is taken out. And no, that's not a trade recommendation. These are momentum, ideas on what they do as trades come and go. Now remember, this is my Cyber Week sale, and a lot of you took advantage of it today, and I thank you. Let me explain what's going on. If you buy a 1-year subscription to our research, my research, I'm throwing in the charting course, $179.95 value, and includes the charting software if you haven't used it before, the 54 videos, all that I've got there for free. So for some of you that just like the morning subscriber video and your month to month, you might want to consider that. That's not a bad move. You're moving from paying $15 a month to paying $156 up front, and then you get the charting course on top of it. Some of you want my full research, and when you do, if you have a let me say it this way, if you have a trading account with us, you get a savings, a big one. And if you don't have one, well, instead of you paying $60 a month, $720 a year, and a lot of you do that, you come in, you pay $600 for the year up front, so I give you a good discount there, and I throw in the course. You'll see it all if you go to our website under the word research. I advise you to take advantage of it if you want this at these prices. If not, so be it. I'm Ira Epstein. You have a good day, and I'll talk to you all tomorrow.